Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, we are going to go through AMC GME price action. I didn't do GME last Friday. Sorry about that. We're going to discuss that today. And I'm going to give you my view for the global market, which of course is going to impact the meme stocks, especially AMC and GME. I mean, not especially, but also AMC and GME. And I'm going to give you my view and combine this view with what is happening on the yields. Because as you guys know, the yields are correlated with inflation, which is itself correlated with what the market is doing. So let's get into it. All right, we start with AMC. In my last video, I was telling you guys that we were having, what was it? An inverted hammer, right? As you can see here, an inverted hammer has formed, all right? Bam, bam, bam. So let's put that in green. It is a bullish signal, all right? An inverted hammer is a bullish signal when found at the end of a downtrend. It's not the strongest one because we don't close. As you see, we opened here and we didn't close above the previous open. We closed below, so it's not a bullish engulfing, it's a hammer. So I was also telling you that whenever you have a bullish candlestick pattern, whatever it is, bullish engulfing, morning star, inverted hammer, you have more, but whatever it is, you can always basically do the same thing, which is dividing the last candlestick, I mean the whole pattern. If you have two candles, you take the biggest one, in three zones, all right? You remember that? And I was telling you that we have, you know, the buying area, the bullish area, the neutral area, and the bearish area, remember? All right, and we opened in the neutral area because we opened below. It was 12.3 if I remember well, and we opened below that. As you can see, we opened at 12.11. We moved a little bit higher, and I mean, as the neutral area is suggesting, we stayed in this area. We were neutral basically. None of the camp won the day, but for bulls it's a small victory because we were clearly bearish, strongly bearish. We then had this reversal pattern and we are now in a neutral area. So we are still neutral for Monday, and we can basically keep roughly the same zones. We can add to that because we need to understand where is the resistance level. And let me get rid of the zones because usually you can use it the next day, but 2 days after it's not the best whenever you had a candlestick pattern. Here, as you can see, if I get rid of that, this trend line is still active. So I told you that many times, but it's always good to make some reminders, is that whenever a support is broken, it becomes resistance. And that's true even for trend lines that have been, you know, declining trend lines, downward sloping trend lines that have been broken on the downside, and then when the price action wants to get back in it, it's not always acting as resistance, but here we can see it is, right? I mean, here not perfectly, but here it acted as resistance. So to me, this is the area of resistance, so roughly around 12.5, 12.6, and the major resistance, which is the pivot point we have. A pivot point is a horizontal support or resistance where you had multiple reactions in the past and usually a lot of volume. So here is our pivot point, 13.5. So I would say that on the short term, above 12.5 we are bullish, but on the medium term we need to get above 13.5. So I don't know what's going to happen next week, but I think that we might have maybe 1 or 2 more days of bullish price action and then maybe some more bearish situation. So we're gonna see. Let me explain to you why. So here I don't have a strong view on AMC, rather neutral right now on the short term. But bulls are definitely trying to take back control. As you can see, we were here oversold in the RSI. We had a bullish reaction. We have here this inverted hammer that occurred on increasing volume, one of the biggest volume we had. The biggest volume we had since the nice move up we had in March. So clearly there is something up, but for now, bulls didn't really take back control on the medium term. So let's see what's going to happen here. The next support is still 9. It doesn't look like we're going to go to 9 on Monday or Tuesday, but if we have another leg down on the global market, we'll very likely go to 9. Even maybe 7.6. All right, so just keep that in mind. For now, to me, we are not out of trouble, even if we have some good signs that we're happy to see that we didn't see for a while. We have probably Citadel after its tweet that is a bit, I mean, probably a trap trying to manipulate the market, you know, as they usually do. But definitely they are buying. I think that they were involved in this trade. As you saw, guys, on the 5 minutes time frame, we had the biggest volume since a very, very, very long time. It was here, bam. You see on the 5 minutes time frame, this was probably Citadel buying. This is my guess. I'm not sure. So, but I don't think it was shorts covering. I think it was natural buyers because the market was going up. But whatever, neutral, and we need to have more information to see what's gonna happen. GME. So GME, it's interesting because those two move together, but they don't give the same signals. And here, what is it, guys? What is this candlestick pattern? I'm sure you know that. It is, how is it called? Sorry, I forgot. Abandoned baby, I think. No, it's not this one. This is the pregnant woman. Let me find it. I forgot the name. Harami, I think. Harami candlestick pattern. Yeah, you see, it's a harami. It's a bullish harami, all right? It's this one, guys. Okay, so harami means pregnant woman in Japanese, and this small candle represents the baby, and this is the woman, and this is the belly, okay? So, very Japanese, but it's a bullish candlestick pattern that is showing, it's a bit the same like the inverted hammer, right? It means it shows that bulls are trying something, that bears were in control and they are no more in control, all right? Then we can do the same little game, dividing that in three, okay, bam, 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 and it gives us three areas, and GME, a bit the same thing, the up and, I'm not doing that very precisely, you can do it, guys. Okay, 108, 77. So 12, 99. Okay, so 89. Okay, so 101. Okay, roughly. Sorry, 99. Okay, so we open exactly on the neutral area, and we stay a little bit above, but we are really at the limit. So same information basically as from AMC, increasing volume, bullish candlestick pattern, and we are in the neutral area. The major resistance level is here, created by this trend line to me. I said to me because we didn't have any recent reaction, all right, on this. This is why I say to me, because this is where I would personally see a resistance, but as long as we don't have a rejection, we are not sure it is. But if we have one rejection and then we consolidate, as you guys know, if we consolidate just below the resistance area after multiple reactions, it makes it very clear for everyone that this is the resistance area, and whenever we're going to go through, if we have an increase in the volume, it's going to be a bullish signal used by algorithms, retail traders, and many more. So we're going to probably have a bullish reaction. For now, we are not there yet. Bears are in control on the medium term, just like for AMC. Bulls are trying to take back control on the short term. They are in control on the very short term, we can say it. So yeah, major resistance around 105, 110. This is the level to take. Bam, bam, bam. And as you can see, we had a beautiful reaction at 77 here. I didn't buy personally. I can explain why. So of course, right now, I mean, it was not the good decision, but I'm still gonna explain why, so that you guys, you know, remember those small techniques. Even if here it didn't work, it's still good to remember whenever a support has not been touched for a long time, okay, like here, and then it's touched, then I like to buy, all right, especially if I have an oversold RSI. But here, as you can see, we came close to support, and then we came back again to it. So the second time, I don't like to buy, even if sometimes we go 3-4 times and then we have a rebound. The first time is just the safest. The second one is already a bit risky. The third and fourth time are really to be avoided. I mean, it's even good to play the other way around. Whenever you see a support or resistance has been tested multiple times in a short time, this is this consolidation period I'm talking about. And this is where you can play the breakout before it happens. So there is a risk that is higher, but there is also a higher reward. So that's something that is interesting to do. So this is the reason why I didn't buy 77. If we come back to 77, guys, I will of course not buy it because it's going to be the third time. So the third time is going to be more risky, even more. All right, now, so basically AMC GME, bullish reactions, bullish signals on the short term, bear still in control in the medium term, but we're doing a great work. We have some volume coming back. We have some buyers, probably hedge funds that come in, and retail investors, of course, that are coming in the trade. And so we don't really know what's going to happen, right? So this is when we go and check the global market. That is helping us to understand what is happening. So triple Q. I can take SPY, I can take whatever. I like triple Q because I have good signals. And I did a very good swing trading job since December. For those who are with me in Discord, you know that we've made a lot of money on the way down. We made some money on the way up. And I mean, I'm just used to trade this index, and it's easier for me to make TA here than on AMC or whatever other stock because the volume are bigger and this is a more civilized market where you cannot have manipulation, at least not obvious manipulation. So it's better for me to make good predictions. So here, the situation is that we have, again, a candlestick pattern, guys. Bam, bam, bam. Look at that. What is it? What is it? This is a morning star, guys. All right. Morning star. Okay. It's this one. All right. So whenever you have a move down, 3 candles, just like here, and you have a little gap down and then a little gap up that is showing that there is volatility here and here, and you have 1 candle below the 2 other ones. So you have 3 candles forming this pattern. This is a strong bullish pattern, especially if we have volume. Here, unfortunately, you can see the volume is decreasing on the way up, which is not good. But once again, on triple Q, which is a ETF of an index, NASDAQ 100, you often gonna have volume going lower whenever the market is bullish because, you know, investors just trade more when they are scared on the way down. So, I mean, it's kind of acceptable. We see the volume decreasing in this pattern, but it's still not very powerful. Sometimes you can see we have the volume growing, okay, like here. So it didn't give us, I mean, it gave us in the end quite nice move up, right? So here I don't see this increase in volume on the green day, so we have a nice pattern with that volume, so we need to be careful. But same as for AMC and GME, we can see that something is up, that bulls are trying to take back control. So my take is that we're gonna have maybe a bullish Monday, Tuesday, maybe Wednesday, and then we're gonna arrive here, okay, in this area around 305, 310. Okay, I will personally short again, increase my short position. I took some profits already and I'm gonna add, and I still have my short position. I wanted to take full profits here around 280. I missed it, as you can see, but I'm still gonna increase my short position because I believe we're gonna move lower, and we're gonna explain why. And if I'm wrong, I have a stop loss just above, so I don't care. I'm just gonna lose a little bit and we're gonna be in a nice move up, so I'm gonna be happy with all my stocks. So it's a win-win situation. I mean, not win-win, but I think it's the right thing to do. Bam, bam, bam. So I'm going to take a short position around this trend line for those who, not financial advice, but for those who want to take a short position. This is the kind of thing that you might be considering, 305 to 310. This is the level I'm personally going to short. I'm going to send an alert in Discord as usual. Bam, bam, bam. So here, yes, here 2 scenarios. And I'm going to explain to you why I'm afraid it's the bad scenario that's going to happen. So, as you can see, we've been doing some Elliott wave counting here in the past week, 2 weeks. And I was telling you already here that a 5th wave might be on the way, right? So, this 5th wave in green. So maybe we have completed 1, 2, 3, 4, 5 in green here. Okay, this C wave because this is only a C wave, A, B, C, and I told you guys, be careful, B waves are tricky, blah, blah, blah. You remember, here we took a short position. This was a typical B wave trap without volume. Even if there was volatility, I remember I was doubting a bit, is it a B wave or is it a reversal? You know, you never know for sure. But this was a B wave, and now we are doing the C wave. So the C wave, as you can see, it can go very low, okay? Be careful. C waves are always, I mean, usually not always, but exceeding what investors think, and they create panic, capitulation, this kind of events, all right? Because investors usually buy the dip and then we go lower and they sell here, they capitulate, which means they take the loss usually at the worst time. And this is when big money players, you know, accumulate a lot of shares and make their money, all right? Smart money, you can call it, all right? Those guys, they can buy forever, right? So the game is not very fair, but this is the game we are playing as retail investors. So careful, guys. I would personally not buy too much between 280 and 270. Even if I put a buy here, you know, signal here, I put it small because I think that it's important to prepare for the case we go much lower. So let me come back to the scenarios. 1, 2, 3, 4, 5 may be complete. In this case, we will probably keep going higher, get rejected here. All right, a little bit with GME coming here at 110, AMC probably at 13, or, you know, even maybe 14. And then we're going to have a question, okay? We're probably going to be rejected the first time and then probably consolidate. And here, either we go lower or we break out, okay? So this is going to be what is going to tell me if we enter a longer correction or if we are out of trouble, at least for a few weeks, and can expect something like that, okay? So I put a 50-50 probability to me. I don't know what's going to happen, but monitor what is going to happen here. And the bad scenario, which I'm going to play because I have stocks and I don't want to, you know, and I have leverage, so I don't want to be stopped here. So for this reason, I'm going to increase my short position and maybe try to make some money on the way down. And so this is the scenario I am fearing. And I mean, I put 50-50, right? Because I like to be bullish, you know, and to give you bullish vibes, guys. The truth is that maybe it's a 60-40, a little bit more bearish than bullish, and I'm going to explain why. And so this is the in this scenario, the 1, 2, 3, 4, 5 is not a 1, 2, 3, 4, 5, it's only 1, 2, 3, as you can see. We are doing the fourth, and we're going to have a dramatic fifth happening, all right? That could lose 25%, and it's going to happen quickly, guys. It's going to happen in a few days. So if it happens. So I'm personally prepared for this scenario. The fifth wave might go, of course, only to 270. I don't know. But I'm careful about what I know about C waves. C waves are usually surprisingly deep. All right. So that's why I would first think we're going to find support here like we did. But something is telling me this, we are not done here. And if after testing 285, we go to 270, I mean, you can see the fifth wave would be very short, right? So the probability we go lower would actually be quite high at 270. So careful, maybe if you guys planned to buy the dip here, just don't go too heavy. Not financial advice. All right, so if we have this fifth wave, then we're probably going to have some kind of a rebound and at least a sideways market. So yeah, my target for the fifth wave might be around 235. All right, so keep that level in mind, guys. I think that if the market comes here, buying here is not too risky, even if it's going to look like, guys, this is the end of the world, everything is crashing. I think this is going to be a good buying opportunity as opposed to what is happening right now. I don't think right now is such a good buying opportunity, but if I'm wrong, it's totally fine because here we're going to have a breakout and very likely a retest around the same level. So this is going to be a level where we're going to be able to buy here, stop loss just below. All right. So I'm still going to find a way to close my short position with a nice profit because I took it here, guys, and keep my long positions on the other stocks. Now, let me finish this video with the US 10-year yield. And this is the reason why I believe we might go lower. on the equity market. I remind you guys, this US 10-year yield reflects, is showing what investors think of inflation. It reflects inflation, and it also makes it more challenging for equity to beat this return and to be attractive for investors. All right. So whenever this is going up in an inflationary environment, equity is going down. And we have a breakout here, as you can see on the weekly time frame. All right. I've been talking about this breakout for the past 2 weeks, and unfortunately, I was right about that. The higher we're gonna go here, the more we're gonna crash. And we went to 320. All right. So this is historically high. Okay, lower than what we had in October 18th, but once again, the breakout occurred, guys. All right, so we don't really care about the recent high. We just had a rejection at the first recent high. For those who followed my course, you know, this is the usual, scenario. We break out, we get rejected at the first high, and then we retest the breakout area and we go higher. So here, I'm afraid that this is only a retest, and as you can see, it has been quite perfect. Okay, we got rejected here. We retested this level to 82. All right, and then now what I fear is this. All right, we keep consolidating and then we go higher. And if we do, we're gonna have this fifth wave on triple Q. All right, it's guaranteed. So as long as we are above this breakout 280 roughly, I'm going to be bearish on the equity market. At least I'm going to be very careful with buying breakouts, because this, to me, is the sign of an unhealthy environment for equity investment. Simple. So I'm going to monitor that. And once again, whenever we're going to break out above this blue trend line, I'm going to start to feel more bullish on AMC GME, on crypto markets, on the other meme stocks. All right, so this is what I'm personally paying attention to. That's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.